Good morning, everyone. Today is Wednesday, July the 10th, and this is the Moneyball Morning Report for the Benzinga Pro platform. I am on the mend, as you can tell, slow but sure, working through it. Taking a look at SPY, we are grinding to the north, folks. Volatility's down. Nobody's buying protection. We've got Jerome Powell on deck again today. Dips are buy zones. So let's take a look at what happened yesterday. Range a little tight. I know it's painful to hear my voice sometimes. Range a little tight, but dip buying really in play. And so, interestingly, this 556 area was the bounce zone, and we really have not broken down. So, pullbacks into this 556 area in the SPY, very likely to bring buyers. 550, 550 to 555 gives us a deeper support zone. I am still of the mind that if you chase a chart out of the prior day's high in an environment like this, that you collapse into tighter time frames and just follow the price action. That's super important. The upward trajectory, traders love the round numbers. Lot of call buying here, a lot of call premium. The put premium, there could be selling puts. Who knows, right? So that's what we've got for SPY. Buy the dips. We are very far from the exponential moving average on a daily formation. And so what we really want to do is pay attention to the price and see that support holds. When support breaks, it tells us that traders are not willing to buy at prior levels that they thought were value. They're going to slip back and let it move to deeper levels below. So we must pay attention to that. Let's take a look at the Qs. Same sort of thing. Qs actually didn't bounce out very well yesterday. They dipped. Whoops. I don't even know what I did with that. I'm going to have to remove it because I changed its location. I got to remove it. Sorry, folks. Remove this fib sequence. All right. So now what we have is this range that it sat in. Top of the range, bottom of the range, top of the range, middle of the range, breakout. Okay, so now we're here. The top of yesterday's, this might have been a pre-market high, right? 500. Or my target for the Qs came in to this 500.60. We're still battling against it right now. My thought is buy the dips. But the dips might be all the way down here at 49.60. Indeed. Remember, I haven't said this in a long time, but it still is true. How do you know what the chart is most likely to do with the current candle? You look at 2 to 3 candles to the left, and you look and you say, all right, am I making higher lows? Okay, that means buyers are coming in. Am I making higher highs? Yes. That means buyers are saying, I'm sticking it out into the next place, and sellers are getting forced out of the market. If they try to sell the top, they're going to get forced out. So what are we looking at now? It's still about this 500 area. Dips or buy zones. Ideally, something that pulls back into the 495.80 to 496.20. It hits all 3 candlesticks. It tells us that buyers came in and defended the line there. That's what we want to look at. What's the next line in the sand? It could be 505, really. I believe we should start some congestion, but as it sits, we have not started any congestion. And so I'm going to just look at the market and say, hey, this is what it's telling me. Now, I also had someone earlier in the Top Step Strategy Lab channel say, hey, you're using these fibs. How do you do it? The one thing to do with a fib is you must always have a formation that gives you a completed wave. What does a completed wave look like? It has a definitive top and a definitive bottom. And you can mark through it just like that. So this is our last wave. But you can draw any number of waves. They can tell you anything that you want to know. At the end of the day, you have to say to yourself, does this information help me to trade better? And right now, what we need to focus on is, are my supports still holding? As long as they hold, I'm going to buy. And that's going to be true no matter what chart you look at, no matter what time frame you look at. no matter anything, right? It's all the same. Okay, so now I'm going to remove this Fibonacci because I am bored with it. There we go. And I don't want this Fibonacci either. I can't tell if I'm hearing the water fountains or I don't know what I'm hearing, but it's making me crazy. It could be rain. I don't know. Anyways, so here we go. Breaking out 5620. We're well above that. 5645 is a number that I put on yesterday. It's about the 75% range here. The next one is going to be 5665. Notice 1, 2, 3, 4, 5, 6 green days in a row. Now, it's been a minute since we've had 6 green days in a row, but it is a grinding formation to the north. It's not dramatic. What it's doing is just raking shorts over the colds. Okay, so what do we want to look at? Pullbacks or buy zones. How do we know where those great pullbacks are? Well, we have to look and we have to say, always yes, and we have to say, well, wait a second, where are my candlesticks touching, right? What am I looking at? And we can remove some of these lines because they really are being very noisy. So 5626 looks like a great pullback formation. If you chase it out of the top, let's see what was yesterday's high, 5645.75. We're 2 ticks from that. And indeed, we haven't tested it. So we've got this high right here. Could we blow out at the top of it? Oh, you betcha. Look at momentum. It's straight up, right? Oh, it's overbought. No, it'll be overbought when people stop buying. Now, it is at a high level, so it means you watch out. You notice, see this? It moved up way high and then gave it back into the afternoon. What are we going to look for? Pullbacks into 5626 that are buy zones. Listen, if you get to 5626 and you slap yourself on a limit order and it starts losing it, it could go to 5612 next. So pay attention. Don't let the market take more money away from you than it needs to. Give yourself a fairly tight stop. Come into these areas and go, all right, I'm going to collapse into a 5-minute. I'm going to see how it holds, and then I'm going to go ahead and stick in the trade, or I'm going to get out of Dodge. It's one or the other, right? So that's really what we want to look at. Upper edges, again, 5665, and then, of course, 5700. That's what's next. Wow, I am rambling, aren't I? All right, let's take a look at Qs. Beautiful. Here's our number. Up above, I had 20,781. What was the high yesterday? 20,771.75. Pre-market, 20,764, but it's pushing higher. Notice what's happening. This is kind of a doji action. So it really tells us the traders are treading water. If you have a Top Step X platform, you're going to see a lot of the tilt action sit at 50% in environments like this. Most of the day, it'll sit at 50%. Why? Because people are clearly sitting on the side of, well, this is a 50-50 slot. I'm going to move here, take my points, and get out. I'm not looking for a thrust in any environment that we're sitting in right here. Okay, so what would you like to do? Well, if you're crazy, and sometimes crazy works in the market, you can short the top at this 771. But you got to give yourself about 10 points minimum. And if it expands, get out of Dodge, because there are short traders floating around in here and they really want to short the market. So when is the last area of pretty support? My thought is that it's somewhere around the heavy congestion where it hits all 3 candlesticks. So it might be 639.75, around that edge. As a matter of fact, nope, I'm going to put that on my other platform as an alert. Okay, so that's what we're looking for. If it starts losing this level, look, yesterday, day before yesterday, we closed at 20,684. Yesterday, we closed at 20,687. You think that number's important? You betcha. This is the 3rd day that we're dancing around this number. We're probably going to see it again. So think about that for a quick bit before you position yourself. I'll go from there. Now, I hate having to do, 2 sets of instruments when I'm trading, but I am working through these combines and these XFAs in Top Step, and for the way that I trade, the YM is the only instrument that makes sense to me at this juncture because of the risk and the size and speed of the moves. So what are we looking at? Bounces at the top, give me sell zones. Bounces from the bottom, give me buy zones. Yesterday, this move was really savage, I thought. I got in a little bit early and had to ride it up, but it did eventually fade. And so pretty happy about that. The line, I believe, needs to be this one here, 39,820. That's sort of the high mark. I wouldn't short before there. And I'm not really sure I would go long until I see how it behaves at 488 to maybe 460. We could have ourselves a wallop of the day, to be honest, but I still think it's pretty sideways. Earnings start Friday. We're still in the doldrums of summer, and July is still the month that gives us the highest bullish formations. All right, let's quickly go to oil. Notice, remember our storyboard about the commodity technical advisors preparing to short at this 85 level. This is what is happening right here. We talked about it, I don't know, 2 weeks ago. Where'd that data come from? Menthor Q, love those guys, but you better be prepared to study because the data is dense, but holy cow, does it give you some great information. What's going on right now? Old resistance, new support. Do we hold 80? I don't know. What is the trend telling me? Lower highs, lower lows. We have the EIA report today. It could bounce, but I think it's going to be a short into any kinds of highs that we see right now. We are getting closer and closer to the election, and the powers that be are going to put a kibosh on this move up, okay? Not having a tinfoil hat, just stating the facts. That is not going to run into an election. It isn't. Okay, here we are. Pardon me. Here we are in gold, still breaking to the north. Let me see where the dollar is. Let's go to Trading View. And let's take a look at that. My apologies for us going so long. All right. Let's launch the yield chart. Yeah, so if this continues to bounce, gold's probably going to have a little bit of plateau. These are higher lows, folks. Look at this. Higher low, higher low, higher low, higher low. Now, we're not making higher highs, but higher lows, folks, higher lows tell you that buyers are coming in on the bottom here. We've got to break this formation before we can get all gung-ho about being short the dollar, okay? As long as the dollar continues to climb, it's going to put pressure on here, but we've got the problem with all the fiat currencies. So what are we going to look for? 2,400, very likely bounce action, pullbacks or buy zones. Look at this wedge break. What would be ideal? 2,350. So I'm looking for that one to take an extended long in gold as it continues to rise, but it is going to run into problems if the dollar continues to bounce. All right, everybody, take it easy. I'll see you on the platforms. You know, we've got our midday update, and I appreciate you guys bearing with me while I've been significantly under the weather. Take care.